Opening range break. Stopped. Range break. Stopped. VWAP reclaimed. Stopped. Do you ever feel hunted in CHOP? They love your stops. But today, we stopped donating to the market. Algos feast in CHOP because we trade like it's a trend. Not today. Today I'm going to show you 5 epic fails and 5 fast fixes. And then 1 simple CHOP mode switch. Something that's going to help you understand what the most important thing to be aware of is and how to adjust your trading accordingly. All right, so what is CHOP? We're going to make this totally measurable. CHOP isn't a vibe, it's a checklist. It's a checklist of 4 things. And if 3 of these things are on, that CHOP mode exists. We're going to need to remember this trader's saying. If they don't scare you out, they will wear you out. It's an overgeneralized statement by traders underperforming in the opportunity, but it has moments of truth as the biggest trades are setting up. We're going to use our CHOP-O-meter that we kind of developed here to help us understand and avoid these epic fails in the future. So the first check on our CHOP-O-meter card, remember we're going to look at 4 things to help us avoid the traps that market makers get us into. Avoid the traps that are going to allow us to just donate money without ever learning anything. The first check is overlapping candlesticks with wicks that are overlapping. Basically, the stock isn't moving any distance. Our traders call this barcoding. It's when a stock's just up and down. It's overlapping. You know that little sound when a barcode gets scanned? Remember that sound. That is a threat. It's not an opportunity. The second check is VWAP pinball. Back and forth above and below VWAP more than 3 times or even 3 times in 10 to 15 minutes. This is so dangerous because it looks like opportunity, but mostly it's just CHOP setting up for even tighter CHOP. Eventually it's going to resolve. Eventually it's going to move, but not before the CHOP gets tighter and tighter, wearing us out of the position. The third is where they're going to scare us out. It's going to be speed without distance. The prints are going to start to fly. The price then stalls. To some, this is the perception of opportunity. It looks like it's going to break out, right? They get people chasing this so hard. To shorts, it's scary. It's a scare you out moment. A quick change on the tape and you feel your blood start pumping, your adrenaline spikes. The fight or flight clicks in. But what do? Well, if it's just speed and not real distance covered, that choppy trap is set. We get an opportunity that's going to come. Remember, they want to give us a lot to pay attention to. It's a dream for anyone who makes markets to have a stock that looks like it's moving all over, but it's actually going nowhere and nowhere fast. So here's this final little piece of a cheat code that we use to round out our signals, to recognize CHOP, and to switch to play the right game for that time. The fourth one is intraday ATR compressed versus the same time prior day. So this is so easy to look at visually and hard to conceptualize. So we're going to pull up a chart. We're going to draw lines on the chart of the prior day range and another line on the chart from a prior day expected range. This is the ATR check. If a stock is moving less today than it did the prior day and it's inside of your prior day range, we can look at the edges and we can look for CHOP, not continuation. So we have those 4 possible checks that we're seeing on the screen right now. These 4 make up our CHOP-O-meter. If 2 lights flash, you're in the arena, but you might get some overextensions, you might get some breakouts and continuations. If 3 of those check, we're now playing their game. We're going to adapt or we're going to donate. In 60 seconds, you're going to see a breakout that looks heroic. And you're also going to see why we sell into it or we exit the positioning. This first one's an opening range break that's occurring within a range. All right? So we have this opening range here. You see that ORB setting up? Are we going to take it or are we going to pass? 3, 2, 1. They want you to take this trade long. It looks so good, right? Opening range break to the upside. But since we're armed with our chop-o-meter, let's look at the data. Is this barcoding? Check. Is this speed without distance? Check. Are we in a prior day range? Check. 3 of the 4 signals indicating chop. We don't need to chase this. We have a clue here. If it does go, there's a big change here. Awesome. Let's adjust and catch the trade later. Let's take a second chance or a first touch of the 9 EMA after the range break. Those are both great scalps we could take. But when it's just chop, we can wait. And when we wait, we get a better trade setting up. They offer us something different, something better. We wait for that opening range break to work, and then we observe, do we get the stuff? And if we do, we take that stuff and the failed breakout that leads to the fast move we were looking for, just the other direction. They were offering us edge, but it was disguised as one source of edge before turning into something even easier to trade. Here's epic fail number 2. And again, a lot of these are trades I actually took. I remember feeling these things. It looks like a fashionably late short, right? But what do we think? Let's go back to our checklist. Is this barcoding? Nope, this looks pretty good. Is it up and down through VWAP with no institutional buyers there stepping in? Yep. No one's really programmatically buying this at or right around VWAP. So that's a check of our chop-o-meter. Is there acceleration? Yeah, but it didn't really have the distance. So that's another check. Is it in range? Yep. You look at the range that this is doing. We have 3 of 4 checks for the chop-o-meter. We shouldn't be taking this trade. We should sidestep this complete chop. We should avoid the loss to mental and physical capital that is going to lead others to an abundance of frustration. But when we see this, when we have our chop-o-meter, we know we shouldn't take this fashionably late. But one thing that might play out in the future, even more, one thing that did play out in the past, and we can learn to apply into the future, is we see that extension into a key level. When we get that extension right into a key area, let's take a stuff scalp. It's kind of like a modified rubber band scalp. It's the same entry criteria, similar idea, but just a little bit of a different look. This threat to others who are going to chase it and force it has become an opportunity for us. I get it. It's hindsight, but it's also learning. This is how studying our trades gets us accelerating forward. Not just our entries and exits and judging our performance based on our P&L, but taking the little bit of time to see what else was offered in the stock that day and how we could act on that next time if we're offered it. This third one is a fake breakdown below support on a higher time frame. All right, so we're looking at this and it looks like it's going to break down, right? We can chase that trade for sure. And we might just want to scalp it. But once that consolidation happens, after that range break occurs, you got to watch out. Because as soon as it lifts, it's coming for our stops. Even worse, let's see what happens here. So you notice how it comes up back above the level. And I had my stop right there, and quite literally it wicked me out. I'm not joking. I was the high of that move. Was my stop in the right place? That's a little debatable, but the reality is what happens next, it drops and goes right to a new low. Like WTF. This is the sort of price action that drives me crazy and really, really used to frustrate me. It's a sort of price action where I hear a trader like just get up out of frustration and go, come on. You know, it's a really important level. It's a really clean, high volume break of that level. It's a really good look. And then what? It just rips to my stop? I mean, seriously, what is that? I'm not going to lie. It's a little bit frustrating. But here's the lesson in this. This stock was chopping to begin with. This stock broke the lows, rallied up, stopped us out or tested stops if you didn't get stopped out, rolled right back lower, put in a new low. Now you can really feel your blood boiling if you were the one that got stopped out. How'd they do that to me? How could they do that to me? Am I going to miss the whole real move now? There's this great saying that we use on the desk. What's the trade? It doesn't matter what's happened already. It doesn't matter what's going on. What's the trade? And really, just because it stopped me out, what is the trade here? With this simple mindset, I can step off the chase and the frustration, and I can use it as information. Was the break of this key level clean? Well, initially, yeah, but no. It broke and then came back a little too high. When it rolled back over, should it find the buying pressure like that? Well, no. So what's the stock telling us? It's really telling us that the imbalance between the supply and demand we expected to be there, in this case, the supply was going to be greater than the demand below the key level. Well, that's just not there. The demand's still outweighing the supply. So what's the trade? We were sitting there and somebody goes, hey, that really looks like a failed breakdown. Haven't we been seeing a lot of failed breakdowns making it back to the top of the higher time frame range and then even sort of breaking to the upside? It's like, oh yeah, we can start by trading the setup. So the setup is now a failed breakdown. And this happens a lot. When you have what looks like a really clean breakout or a really clean breakdown, and it looks really good initially, but then gets really choppy because our chop-o-meter is presented to us. When we have that, we have to really think about, is the setup different than we thought? It's not a range break to the downside. It gets choppy, and as soon as it comes back into that range, it's actually a failed breakdown setup. So one of the things we did, or we could do, is start an options position so we can control our risk and we can target the high of the range and see what happens there. Now, this is one really important thing, one trading secret. Patterns repeat themselves. I get it. It's not really a secret, but patterns repeat themselves, especially with recent memories. In highly competitive names that some people view have like a ton of upside and others think are completely overcooked. The way the patterns have been playing out recently becomes a little bit of a self-fulfilling prophecy, not just on the trade level, but on the setup level as well. So we can start by trading the setup. Now, the idea of trading the setup is such a powerful concept that we added all the setups we look for to the Scalp Radar training so we could add a hugely important layer of context to the individual scalps we get offered each week. With that context, we have the ability to trade the trades that get presented, but also understand the setups as they get presented. Because frustration from one trade looking very good but then failing miserably led to a great setup in the other direction, and ultimately a trade that gets presented to us later. See if you can find the trade on the chart here. You have to be aware that when you're in chop, you cannot get caught predicting. You have to see it change from one setup to another, or one trade to another first. It's one of the most important things you could ever do in your trading. Let the opportunity get presented for you. This is our fourth fail, right? We talked about this trade already. This is a failed breakout into something that looked like it was trending lower. But the reality is it's still in range. Based on this setup, based on the opportunity that's presented, this looks like it should be a trending day, but it's not a trending day, and we have to look at why. So this trade was a failed breakout into an opening range break to the downside. It's a great trade. What happens most of the time, more than 70% of the time based on our back testing, is that leads to at least a 90-minute trend lower. Let's think about what's happening. The price was choppy, but then it tried to break out. It really should have broken out. But the reality was sellers were there and they took and maintained control of the price action in a way that suggested a big seller or a series of big sellers have a decent amount to sell. A sell program kept it from breaking out, and that sell program, like all sell programs, should last for 60 to 90 minutes. That's a really common thing. Buy programs, sell programs last 60 to 90 minutes. It's just the rhythm of the programs. They sell, then they let it kind of bounce a little bit, then they sell some more, they let it bounce a little bit, but then when we look back, it lasted for 90 minutes or 60 minutes if the selling's just really aggressive. So we get short on the break of that failed breakout and the opening range break lower. And then we get indications it might be a trend. Just when it looks like it's at its best, there's that nasty snapback. One of those gut check rallies that's just like, oh, are you kidding me? All right, it tagged VWAP and it starts to roll over again. Let's see what happens. But then we look at the higher time frame chart. Remember how important this is as one of our checks. Was that seller that was supposed to be there, that seller that shouldn't have been there, would they have cared where the price action was in relation to yesterday? So if this is a really valid trend day lower, would the sellers lose control of the name like this? Honestly, probably not. So we have to be really, really careful. This is an audible we have to make because we have to respect the fact that it's not trending and it's showing indications that it's just chop. And in chop, our emotions go all over the place. We went from having what we wanted to having none of it at all to maybe having some of it all in a really short time. It's important to remember that even if our emotions are all over the place, the stock is not. This is the most important thing in chop. Our emotions are going to go all over the place as the stock goes up and down all over the place. But the stock really isn't moving. So we have to work to manage ourselves and just accept the way the stock is trading. So when it goes down and it's still in chop mode, we have to take it off. We have to back off and just accept what is offered. We have to recognize that chop is its own opportunity set. We're going to take a look at one of the worst feeling examples. We call this the day too soon. And it happens a lot when you're in a choppy environment. We get this awesome entry. It looks almost perfect initially. And then it comes and stops us out. We shorted the pop with edge. We go into profit. Then it gets a quick run, stops us out, and then rolls without us. All right, listen, at this point, the trade just really takes you and makes it difficult. Again, we're going from up in the trade to down in the trade so fast, then stopped out, then we're having to watch the stock just unwind. This is really tough, but in choppy trading, this is what happens. What we need to do, what we need to recognize is how the price action trades all the way through. So when we're trading choppy markets, the key here is respecting how challenging the chop can be. The key here, the secret, is that we just don't put it on and go hands off. In more trending environments, we put it on, hands off. What we really need to be sure of is that we're watching a trade all the way through in the choppy environment. Now, imagine we knew or recognized with our checklist that we're in a chopping environment. We'd probably take half off the lows, right? Maybe we still get stopped out of the trade at the highs, sure. But wouldn't it be a lot easier to get back in knowing that we had taken some off, it comes and stops us out, and then we see that same stuffed scalp that we had before and look for that continuation? For sure. They profit on us when we pretend chop is a trend. So we don't pretend chop is a trend. We adapt. We read the failure. We read the defense. We trade the edges. We don't trade the hope. Now, when you hear that gentle ping for confirmation, that's our desk focus cue. It doesn't trade for you. It helps you notice what you're trained to see. This little small checklist can really make a big difference in helping you understand when to take profits and when to look for things that could run, look for things that could trend. You can run this quick 60-second drill tomorrow. This quick 60-second drill, all it is go through that checklist as you're looking for a trade and then let that trade play out and understand if it is trending, I'm going to hold my trade to its target, and if it's choppy, I'm going to be much faster. If you've done that, comment where you use this check mark to review if you're in chop mode, when you identified it and sidestepped a mess. And if you want really good timing videos, really understanding some of the trades that we take on a regular basis, go ahead and watch this scalping in slow motion, this 10 perfect reps next.